Richard Curtin, University of Michigan Surveys of Consumer Research Professor and Director, joining us now. He leads, of course, the team that came out with those sentiment numbers. What's the big takeaway? How would you read this data?
Well, it is optimistic in the sense that consumers have noticed declining gas prices mainly, and that's why their rate of inflation fell by 0.6 of a point during the year ahead. But there is some, negatives to the picture. Last month, we recorded the largest one-month change in how many people spontaneously mentioned high prices for homes, vehicles, and household durables. And in this month, it's come even higher. Now there's 2/3 of all folks that think that home prices are just too high. And it's not causing them to buy a home sooner than they would like to avoid changes. They're more likely to postpone. And the critical group is those in the top third of the income distribution. And they were more negative about home and vehicle purchases than the rest of the population. So I think that, I don't think that we're going to see a decline in sales because, after all, we're emerging from the pandemic. Consumers have a good deal of savings and so forth. So it won't play on that. But, the housing market is going to have some tough times ahead.
What I also thought was interesting was the decline in inflation expectations. So I wonder if what we've learned is that the consumers do buy into the fact that the inflation pop is transitory.
Well, I'd like to believe that. And, the data suggests that consumers do hold this as a special time where rising prices and rising wages are to be expected. But that easy acceptance, if it lasts for a couple of years, say to the end of 2022, when many people think the pandemic will still have some effect, then we become more inclined to believe that it's not transient and that it will take off from there.
Yeah. Richard, at what point do inflation expectations, consumer inflation expectations, start to impact behavior? At what point do consumers go from a sort of deflationary environment where it's okay to wait to a environment where it's okay, I now need to go out and spend money because I think prices are going to be higher going forward? Is there a kind of line in the sand? Is there something you can take away from the survey over the long term that gives us some clues about that?
The last inflationary period started in 1965, and it didn't peak until 1980 or 1979, 1980. So it takes a long time for consumers to adopt these views. And I think that it will take a similarly long time, not as long as it did the first time, because a lot of the folks are aware of that earlier period. But I think it will take a long time before inflationary psychology is the main driving force in purchases of homes or cars and other large household durables.
Yeah, and Richard, I guess, what do we learn about the type of spending? I know you mentioned housing, but we've heard a lot about revenge spending, where consumers have so much money saved, they just want to go out and buy stuff. Is that consistent with what you're seeing?
There is substantial evidence that there's pent-up demand. Now, I don't know why they would call a purchase a revenge purchase, but I think that what we're seeing now is both a substantial increase in purchases due to pent-up demand and their vision that they're going to have stronger job and income prospects during the year ahead. But it's also true that consumers have learned that there's a great deal of uncertainty involved in the economy. And consumers now, when we ask them about their current level of savings, they say, well, it's not that high. I want to hold more savings in reserve because I think the economy is more uncertain going forward.